Why would you want to trade something that's not moving or it's in a choppy range-bound market? Just to prove that you're right? I'm looking for easy stuff. I'm looking for markets that are making a move from one side to the other, and there's lots of space for it to go. It's going to go vertical. It's going to be over fast. It might only be 25 pips. It might be 50. It might be 100. But why would I want to sit there and chop back and forth in a market off of two levels with no room for any real profit where I could put size on, just to prove I'm right? Good day, traders. 1 minute mindset reset. Today, talking about predictions versus performance. So yesterday, I got some emails and asking me to, start predicting where I think the markets are going rather than reviewing my process. And I, talk about this all the time. I could care less where the markets are going to go. I don't have any inclination to predict or think that I can predict where it's going to go. One of the things that I did discuss is what I like to do with the markets is go and look at the areas outside of the highs and the lows, 25 to 50 pips. Now, as the day expands on the larger volatility instruments, oil, NASDAQ, prior to New York, I will look at those boxes, but also when we have large range days, 25% or 50% range expansions. That's something I learned from Bill McLaren. So those levels coinciding with numbers. So I'll just pick the closest major round number level to those areas to look for strike zones. But it's all dependent on the time of day. And all I'm looking for are setups. I don't care about what, I look at my daily charts. Are we down low? Are we up high? Are we at monthly lows, monthly highs, weekly lows, weekly highs? We've had tons of volatility. And then I'll scan through the major pairs to look for patterns on the major pairs. So for example, Aussie dollar often will mimic movements in gold, not tick for tick, but in the general overall pattern of the market. Sometimes gold, we had a fantastic squeeze yesterday, day 4 out of a 3-day setup. A couple traders nailed that. So I'm looking for setups, and I'll skim through and look for pairs that are moving. They've triggered previous days highs or lows. I'm looking where the weekly box is, and then I'm looking at areas 25 and 50 pips outside of those ranges. Then I'm looking for setups. So what pair is moving the cleanest? Sometimes the price action will be different on different instruments. Again, reinforcing, I'm just looking for obvious stuff. I'm looking for the red car. And people have said, well, let's do this in live time. Well, I went to the pool for a swim yesterday, and I came home and looked at oil after I had taken a long position at the high for a 45 pip stop hunt, and saw that oil had broken down. Somebody asked me what a broken down market is. A broken down market is when it goes 3 levels and collapses, or it goes down 3 levels and breaks out and starts to reverse, which means that shorts are underwater. If it's a broken down market, that means longs are underwater. There's a neckline there, a quarter or a 50 pip box of trap volume. When that breaks down, the next obvious target is where that move began. So again, the market will seek level 1, level 3, level 3, level 1. Inside is the vertical move. And typically why it goes vertical is because there's no volume there. Liquidity at the tops and bottoms. So process and performance are all I'm concerned about. I don't worry about predictions. I could say last night I knew the NASDAQ was going up. Why? Well, we were all the way down at the bottom of the month, second tap to the low. But in terms of it being an easy trade setup, maybe it was a squeeze, a vertical stop hunt after they'd locked in the low. Go back and look at the high and the low of the London hour, and then go 25 to 50 pips below that area. They locked it in the gap time. They broke the high. They came back down 75 pips from the high right at the US Open, 25 pips below the 00 box, brought it up and into the second hour, made a squeeze that went vertical on the New York Open to take out the high of the day. So there's some easy textbook stuff. And then there's some pairs that you'll look at and you'll go, okay, well, I just can't read that. I don't want to try and be right. I don't want to try and predict. And if I do that, 90% of the time, I'll probably be wrong. So again, I'm looking for setups, and if I'm not sure, I just wait. I can get into a second leg, a first bounce. I don't have to be the first mouse. First mouse usually doesn't end up so well. The second mouse gets the cheese. So again, I'll reinforce my position on markets is I don't want to predict. I don't want to be right. I want to execute setups and make money. That's all I'm focused on. I don't care about all the other stuff. I'm not worried about things. I said I want to know if there's any news on the calendar. If there's no news on the calendar and the market makes a big move in the first hour, I can extrapolate from that in most cases that will be a false move, because there's nothing driving that first hour breakout or 3 levels of rise or fall. That's something really, really important to grasp. If there is no fundamental news impacting a first hour shift that goes 3 levels, that's a key indication that the next hour can be the reversal. Think about that. When there's news, it can go for 3 hours. And that's really important to understand. There's a big difference between a movement in that first hour with no news versus news generated catalyst type of movement. So hopefully you got value from today's video, traders. I'm not interested in predicting. I'm interested in process and performance. End the week on a strong note. It's Friday. We've had some fantastic movement. Currencies, commodities, indexes, everything's been moving. There's been plenty of opportunities. Don't do anything done. Do the good work that you've done this week. End the week on a strong note, and next week's going to be even better. Have a great day, and may the markets go with you.